I will use Bollinger Bands for a trend reversal scenario. This will give a clean, low-risk entry with clearly defined stop loss. When it comes to Bollinger Bands, there are three key components: the middle band, the upper band, which is 2 standard deviations above the middle band, the lower band, which is 2 standard deviations below the middle band. Be it any trading platform, just open the indicators menu and search for Bollinger Bands. Once added, I will adjust the visual settings a bit. I set the middle band as a thick red line and the upper and lower bands in blue color and the background shade as yellow. This helps visually separate the price reaction to each band. Let's quickly understand what these bands indicate. When the bands are white, the market is volatile. When they contract, which appears to be like a squeeze, the market is ranging or consolidating. The price tends to bounce between these bands, but when the price hugs one band for too long, it's often a signal of continuation or exhaustion. In trending market, the reaction to the middle band becomes really important. Before we begin with this setup, we have one precondition, that I should be able to spot a clear downtrend preceding this setup. This is what gives us the context. As this setup helps identify bullish trend reversal, it is important that the bearish setup should be complete and closing exhaustion. Now our first step is to find the first bounce or the first bottom. Well, this is when the price touches or crosses the lower Bollinger Band. This first touch is often sharp, usually with high volume or large candles. The lower band will likely be sloping downward and the bounce will feel temporary, but this is our first clue. Our next step is to look for the second bottom. We will see that the price makes a pullback, but instead of making a full price recovery and the price going bullish, it drops again to retest the previous low. The second bottom should not be too much lower than the first bottom, otherwise this is a downtrend that's continuing and not really a double bottom formation. This is critical. Ideally, it touches the lower band one more time, but the band should now be flatter or slightly turning upwards, as this is a signal that the price is now losing momentum and the bullish run is about to happen. As we can see that we would have a clear formation of a W pattern, which is a double bottom formation. At this stage, we wouldn't see the complete W, we will see a reverse N formation. Now at this stage, I will closely watch the candle formation, as this will start giving me the signal that the demand is now building up. The second bottom should really feel like tired, and at the same time the candles following the second bottom should start showing a price action which may be giving us a bullish signal. Now we will wait for our trigger, which is that the price should close above the middle Bollinger Band. This is significant. I usually wait for a full body close above it, not just a partial close, and the middle band acts like a trend filter now. Once the price is above it, we have seen a shift in structure. At this point, it's also common to see that the middle band will start shaping upwards. This can be considered a significant signal that our bullish pattern may be about to set. Now we will look for volume confirmation to provide strength. If I see a noticeable increase above the recent volume trend, that is extra green flag for me. It tells me that there is momentum behind the move. So now that we have witnessed all our conditions, it's time to enter the trade with the right stop loss. So once I see this breakout candle close above the middle price range, I enter the trade. Stop loss goes just below the second bottom swing low, not the lower band but the actual price low. And the profit target, I usually trade it towards the upper band. If the momentum is strong and volume remains elevated, I may hold it even longer. On the contrary, once breaches the middle band, which is price closes below the middle band, that's a sign to exit the trade. Let's have a quick look at another example. We first see a downtrend followed by the first bottom. We then see a bounce. However, there is another pullback. This time the band is flattening. The formation around the second bottom is really weak. We see the second bounce with a strong price action formation. I can then see the middle band slightly starting to tilt upwards and price breaking the middle band. Hence all our signals are met. We can now take the long position, and we would have gained all this much that you can see here until the price finally breached the middle band, which was our signal to exit the trade. Now just a few precautions. This isn't a strategy to be used in sideways market. In fact, if the Bollinger Bands are flat and tight, I skip setup entirely. Another caution, if the second bottom closes below the first one significantly, I also avoid it because it means the market has not yet recovered and is not set for a bullish reversal, and it means that the structure on the bearish side will continue. So that is the simple Bollinger Bands hack which I quite effectively use for bullish trend reversals. If you have tried something similar or if you use Bollinger Bands differently, I would love to hear your take. Please leave your suggestions or your feedback in the comments